In today's video, I want to walk you through a trade that I did earlier in the week, and it's quite an easy trade if you understand the setup. The trade that I'm referring to is this trade that I posted on my Twitter profile at Forex Recipes, and it was done on Tuesday last week, okay, Tuesday the 9th of July. Now, Tuesday the 9th of July was a important trading day because Tuesday took out the low of the week, okay, so that's Tuesday. Okay, that's Monday, so we've gone below Monday, which is obviously low of the week, right? Monday was the first trading day of the week, okay? And this here is previous Friday, so there's last week's high. That's the ultimate target, right? And that is at 2391 that I've been calling during last week as a target, okay? Now, I've taken multiple trades. You can see them on the Twitter profile while we're getting to this 2391, okay? So once the low of the week is taken, that is your trigger, okay? That is the easiest trade to get in because they are the best trades when you have the low of the day taken or the low of the week, and vice versa when you have the high of the day or high of the week taken, okay? You need to see a rejection. So if I drop down to a 15-minute chart, and let's go back to that low of the week. Now, that particular day was also a news day, okay? If you go back and look at the news calendar on Forex Factory, you can look at the news calendar. That also was a news day, okay? So there was the news at 10 a.m. on that day, okay? And what this does, it takes out all the liquidity above, okay, prior to going down and taking out the low of the week. Now, I want you to look at this pattern. It's a 3-bar pattern. This here is the bar, okay, at 11:15. So this is the end of New York session. We have taken out the low of the week, right? Monday's low has been taken at that point in time. Go back and look at your charts. And this is what we call a pin. A pin's to the low and basically rejects. This is a rejection block, okay? Rejects the low of the week. And then we have an engulfment candle that closes above this pin, okay? So that 3-bar pattern to me is a bullish pattern, okay? So you've got a down candle. You then have this next candle that closes bullish, but basically wicks pins to the low of the week, rejects that low of the week, okay? And then we have bullish closure. Now, these body closures are above the weekly low. If you look at the weekly low, let's see if we can find it. That's the weekly low there, okay? So if I put a line at the low of the week, you can see we've wicked down to take out the low of the week, okay? So that's Monday's low. Okay, and we have rejected, meaning that we don't have a body closure below that low. So we've rejected the low of the week. We're not going down. Not only have we rejected, but we've actually closed bullish in that 3-bar pattern on a 15-minute chart, okay? And that, for me, is enough to know that we are now bullish, okay? We've rejected the low of the week, rejected the low of the day, which is Tuesday, and started to move back up. Target for the immediate trade will be at these highs, okay? But I'm going to show you a better target and how to assess what that better target is. Now, you can drop down on a 5-minute chart to get a better entry, okay? One thing I do want to say is that this entry is at the end of New York session. So sizing is important, right? You've got to manage your risk according to your own risk tolerance profile. Because I typically like to trade within the sessions. But I did take this trade because that was the time that we rejected the low of the week. So here is the down candles. Okay, those down candles are essentially the order block. Okay, those two down candles takes out all this liquidity. These down candles are just the wicks into the low of the week, which is basically a stop hunt. That's what that is, okay? So these two down candles that take out liquidity, notice that we take out liquidity above, okay? We go above this candle, then we go below, take all the liquidity on the left. And then we trade above these two down candles, which is the order block, okay? And we come back down into the order block, and that's where you could long on a 5-minute chart, okay? I took the entry on a 1-minute chart, okay? So you can take it on any time frame, but the key is to know that, I'm just going to go back to that, the key is to know that rejection of the low of the week, and that 3-bar pattern on any time frame is the key where you see the rejection, okay? So let's see if we can go back to where we want to be on a 1-minute chart. It's going to be a little bit hard to find this, so we need to go back to the 9th, okay? We'll just follow this line, we should be able to get it. So my entry on this particular trade was a 1-minute chart. You can see when I posted it on Twitter, we're looking at a 1-minute chart, okay? I'm going to show it to you here. There's your weekly low, okay? And we've tapped down into it, that down candle going up, and then go back into the order block. So there's my long back up to this gap. Okay, see if we can find it on this chart. We don't have to. So that's fine. I've shown it to you on the Twitter post. You can find it on your own charts as well. But let me show you a couple of things. I targeted, let's see, just the gap that I found. Okay, so I simply targeted 50 pips, which is kind of my go-to target level when trading outside of session. And you can see that on a 1-minute chart, I traded up as a 5 lot, so I managed my risk. Normally I trade a 10 lot or higher, okay, because this was outside the New York session. And so I've targeted just this gap on a 1-minute chart, okay? But the key here is that there is a key entry, the low of the week, okay, and rejection. The ultimate target for that is above this high, okay, so you can hold. You can look for a 1-hour fair value gap, okay, a 1-hour fair value gap on the other side. So let's try and find that. So let's go back to that Tuesday. The entry was, where are we? Tuesday 9th, where's 9th? There we go. Okay, so when you trade this down on that session, which is outside of New York on Tuesday, so you enter long on a 5-minute or 15-minute chart or 1-minute chart, you can see we've taken the low of the week. When you're looking for a target, you could target here, okay, which is a news high, or the top of this fair value gap, or any other fair value gap on a 1-hour chart, okay? Now, we don't really have one apart from this high here, which is above this, which is a good target from that entry, okay? which if we look at the pips, so let's say entry somewhere around here, above this level is over 150 pips. Okay, if we close this gap, that's 160 pips. Okay, but what I like to do, what I did do, is I looked at that and I identified a exit on a 4-hourly chart. So looking at a 4-hourly chart, so there's that Tuesday, the 4-hourly chart is there, the gap. Look for a gap. Okay, so from that Tuesday, you could target, as I said, the gap there. Okay, that or this open gap at the time we did not close this gap fully with this candle, so that could have been your target, and that is what I did target with some other positions that I had open. If we try and find that, let's have a look on the Twitter. So my first 5 lot on that was at the gap, and then the following day I think I took another entry. This was the following day, Wednesday. You can see there's that news. Let's have a look at this one. There's that news on the Tuesday, low of the week taken. So on the following Wednesday, we had low of the day up to, because we're still targeting this level, right? That level on a 15-minute chart was still the target, which we didn't get hit on the Tuesday when it occurred. So if we go back here, okay, I've taken this entry and I've closed somewhere here below this high. I've closed somewhere around there, okay, at that gap on the 1-minute chart. But then the following day, I've taken this trade. Okay, because I'm still bullish because we haven't reached this target. And all I've done is taken a long entry from here because we had these 3 down candles, low of the day, taking liquidity coming to this order block. Okay, and so I've taken the entry there, you can see at the low of the day, right? And I'm targeting that level, but I don't have to wait for that. And that's important. Okay, we know we're bullish from this low of the week has been taken already, so all the work down here has been done. Okay, so we're not going to come back down here. And then we see 3 down candles. There's a 45-minute dump on a 15-minute chart that takes our liquidity and comes into this order block. Okay, from previous day PM session. Okay, this is the AJ session. I'm targeting this, but I don't have to wait for that. Even though I'm going to get it, I'm happy to close. Okay, when I reach my target, or 50 pips, what I was targeting at this point in time. And that's what I mentioned here. It's easy 50 pip trade. Okay, because we're coming into this level, which was the previous rejection block. Sure, we are targeting that, and we may get that, but I'm happy to close that out because of time. Okay, at that point in time, we are at close to the end of Asia. You can see it's consolidated. Okay, so even though I'm looking for that target, I don't have to wait for that target to be profitable. And often I will close my trade out early to take the money off the table and walk away. Okay, and which is what I've done here. But the whole premise of this trade is that once that low of the week has been taken, which we have taken the trade on the day that the low of the week was taken, and we had profited, okay, on a smaller position, 5 lot. But our ultimate target for that is back up to the high created on the news day, right, at 10 a.m. on that day, which we get the following day. And we took a trade the following day in the Asia session, which is the overnight session. You might not trade Asia depending on your time zone. And those 2 up candles yield another 50 pips. So that was the premise of that trade because I was still bullish, bias, still looking for this level to be hit. Okay. Now, as I said, when I've taken this position, I did put on another position after this weekly low was taken. Let's find that where I targeted the fair value gap that was on the 4-hour chart, which I will show you now. Okay. So there's a low of the week taken. This 4-hourly chart, gap here on this 4-hourly chart was a target. Okay. Right there. Let's find this trade. There it is here. So here's a low of the week taken. Okay, from this low of the week, the initial target can be this high on the 4-hourly chart, okay, or this gap in here, where you have this high as well. When you have a high inside a gap, that's high probability because that is liquidity resting above those highs, and this gap also needs to be balanced. And so that's why that becomes high probability, and this is where I had a massive trade that I entered somewhere in here when the low of the week was taken, okay, and targeting this 4-hourly gap, okay. So the key message in this video is look for when the low of the day has been taken, or the low of the week that has been taken, look for a rejection, okay, on a 15-minute chart. That is a 3-bar pattern where you have a wick, you got this down candle, that's the order block. This in itself, this is 3 down candles, another 45-minute dump, okay. These 3 down candles in itself take liquidity, okay, all this liquidity has been taken into those 3 down candles. This here is just a stop hunt into the low of the week, immediate rejection, bullish closure, then any push down into this 3 down candles is a potential entry for long. Notice that that's after the lunch session, okay, the 1 p.m. If you get this, look for your entries around 1 p.m. So after the New York session has ended, you want to look for entries at 1 p.m. around that time. I entered earlier than that, okay, because I'm familiar with this pattern, and I entered on a 1-minute chart, okay, and I'm very nimble. If we come back down here, then I know I'm wrong, and I would close the trade. So the quite tight stop loss. My ultimate target was here, okay, well I took multiple trades. I took the initial trade with the 5 lot that closed it here somewhere at a gap on a 1-minute chart. Then I took another entry the next day, or the overnight session in Asia, for these 2 candles, that was 50 pips, and then I had a bigger position on to target the higher 2391 level. Okay, so we'll continue to talk about some of the other trades on my Twitter profile. Always look at the Twitter profile because that's where I journal my entries. Okay, I will now talk with you in a future video.